Hey, this is Justin with daytradethemarkets.com, and I wanted to do a quick video today looking at just a huge sell-off that we had in crude oil today. Oh, by the way, today's Wednesday, March 8th, 2017. And I wanted to look at the crude from a couple different levels, both from a context level and from an aggression level in terms of the clues that we had that this might be a vertical day and some of the ways that we could take advantage of that. First, though, let me just say a couple things. I haven't done a lot of videos lately. I apologize for that. I've been dealing with some personal issues with my family health-wise, but that's going well, coming to a head. And also, so there should be more videos coming out, especially starting next week. I wanted to tell you very quickly, we are going to have some major changes with our business, and I think a lot of people are going to really love this. We're going to start teaching something that I've been doing in my personal trading for a couple years now, and I've actually taught a few people one-on-one this technique, and they've loved it. We're going to start teaching this to our entire group here, and look for some more information and some more announcements starting next week. Just make sure you stay on the list for that. But we're going to be talking about an idea called box theory that's going to really, you'll be amazed at how it helps you make sense of the market throughout the day. And then talk about how to score trades on a scale of 1 to 10 to really determine which trades make sense to take, which ones you should pass on, which ones you should be more aggressive on and hit harder versus which ones you should be a little bit more nimble on. So again, just wanted to say that, look for, starting next week, a lot more information. But I thought today was such an interesting day in crude that it was worth taking the time to do a quick video today. So again, as you can see here in crude, we sold off, here is yesterday's close, a little above 53, and we touched right around a little above 50 today. So it sold off almost $3 during the regular trading hours today, or roughly since the inventory report at 10:30 Eastern time. So I wanted to look at this on a couple levels. Now, we always talk about, our software is really great in that we can see, when there's extreme, and strong, selling in this case, and we can see that it was just kind of doing that the whole way down. So we can see kind of inside the bar, which is very helpful, but that alone is not really enough. You really need to be able to put the market in context and understand what you're seeing, both from a bigger picture standpoint and on the day. If you can, one of the two is a great skill to have. If you can put them both together, then you've really got quite an edge, at least in our opinion. So let me talk about some of the clues that we had for the crude oil today. So if we look at, this is just a daily chart. You can see obviously today was a huge selling day down. But if even if I hide that day, just look at what we were thinking heading into today, you can see that basically, since November, mid-November, we've been on a pretty strong rally. We've actually got a couple of gaps that are unfilled to this point, and it just shot higher through mid-November and up to the beginning of December. Here's December 1st. Since that time, however, you can see that essentially we've been kind of just stuck in a relatively tight range for crude oil, where it's been going side to side for literally three entire months. And so one of the ways we look at this when there's a lot of consolidation, if you will, is you can build a market profile. Usually you build them for 2 or 3 days or 4 days at a time. That's basically where you just kind of scrunch all these days together and look at where we spent the most time and the most volume. And if you do that, you get this type of a chart. And again, this is a little unconventional, but it's basically all of those days. Again, if I were to circle it, starting from December 1 all through yesterday, basically through Tuesday the 7th, all of these days kind of condensed into one day, so we can see where this market is showing value. Another way to think about that is we've spent the most time and the most volume in this area between these two magenta bars. This is our value area high right here. This is our value area low, and we're most comfortable here at the point of control, which is around 53.75 or so. Okay, so what that's telling us is that this market has found fair value, fair price. Both sides agree that this is about what crude should be valued at over the past 3 months, and that every time we've tried to test above that or test below that, it's pretty quickly come right back in. Okay, and you can kind of again see that on the daily chart. In fact, if I draw these, if I draw the value area high and value area low, again, just to be clear, this line here and this line here, if I just put those on and show you what that looks like on the daily chart, you can see that this is basically that value area in this area right here. And what that means essentially is that this is where we're most comfortable. And every time we've tried to test above there, it hasn't been, I just say comfortable. It doesn't like it up there. So it comes right back in. Tests up, it comes right back in. Down here, every time it's gone below, it's come right back in, okay? Now, generally speaking, when you have an overlay like this, especially an extreme one like this, when we do break out of it, that's potentially the start of a major move, okay? Now, every other time it hasn't really worked, but that's the idea behind it, okay? And so you can see that when we do break out of it today, this one, it finally did make the break, and it actually made it down to our next level down here, just above 50, which is the low of the last day of November of trading with this big gap, okay? And so you can see it did take off, but within that fact, so now if we go back to the intraday chart, and this is a 2-minute chart. You can use any time frame with our software. I tend to like a 2-minute on crude oil. If you look at this, you can again see that that's that 3-month overlay, okay? And today we opened with a selling gap, a pretty strong selling gap. And generally speaking, when you break from an overlay like this, it has the potential, doesn't mean it will always happen, but it has the potential to be a nice vertical day. And what it will typically do, if that is the case, is it will typically come back up toward the, if it breaks below value to the downside, usually come back and give the value area low a kiss before having the vertical move. And if it comes back up there and does more than a kiss and actually starts to get comfortable back inside of this range, well, it's probably not going to go this way. It's probably just going to come back in value, and it may make its way back up here eventually, but that would kind of show us that this test lower didn't really have any legs. In this case today, you can see that when we put it all in context, it did come up here and give it a kiss and then sold off pretty hard, for a total of about 3 points today. Now, if we look at this in a little bit more detail, okay, knowing that that area up there, 52.96 or so, was an important level, then we want to say, okay, are there any clues that we can use to, take advantage of this context, if you will, and that's where the intraday information comes in. Now, what complicated things a little bit today is that at 10:30 Eastern time, we have the crude report, which is right here, and our initial reaction off of that was very positive. You have to take that with a grain of salt. You have to let it settle in a bit, but basically, when the news came out, we did have a pretty nice rally higher. We were actually doing a live session today, and we're talking about it that we know that this is a pretty good area to be short. It's a little bit hard to just jump in there with a limit order when you see that right in front of the news, knowing that there's been some extreme buying that's come in right after the news, but we know that's an area, so that we know that if there is any sign of rejection up in here, and we did see a level 2 bar get its low taken out with some level 1 selling bars and then a decel, and it took off, that you could be aggressive and jump to the short side. Another way to look at this, though, is if we look at this extreme kind of wave of buying, started with this level 3 or extreme buying aggression bar and the high velocity move, we know that apples to apples, the low of a wave of buying like that should hold, okay? I say that in quotes, it should hold. That's what, all things equal, that's an area where the buyers came in really strong. They should, quote, protect that area. Now, when that doesn't happen, that's often a sign that we're going to move in the other direction. And that's especially true when not only does this area, this circle, not only does that not hold, but it doesn't hold while being taken out with extreme trading in the other direction as well, extreme selling in this case. So you can see that when this area got taken out, that's a pretty good sign that the sellers have just taken over for the day. And we know that with the context, this is probably, or has a pretty good, it's easy to say, in hindsight, oh yeah, it was easy to see. It's not that easy to see. In fact, I only took one trade off of this move, and I did okay. In hindsight, I wish I would have held it for a lot longer than I did, but that's okay. I think anyone that tells you they caught every, from the absolute top to the absolute bottom is probably not being honest. I don't think that you should hold yourself to that expectation, is what I'm trying to say. But if you can identify that when these sellers are taking over from this area, from a break below value, we do have the potential for a pretty good vertical move. Now, a couple ways to do that would be, one, you could just be aggressive and hop on when we see this come in and take that out and just say, I'm going to go for a ride. That's one way to do it. Another way, and it doesn't look like much, but at the time, and this was a pretty decent range for the day, here was our low of the day at that time, and when we got below there, In here, we know that a good launching point for a vertical move could be when we test below the low. If you want to hop in here and we got a decel here and we got a level 2 bar that didn't have much follow through and decelerated here, that's not a bad launching point if you wanted to kind of get on board from there. Another way, because I guess the way to think about that is if you're right, we have a vertical move. If you're wrong, we know that we're wrong when we start to trade back inside of that low of the day from earlier here. So if we start to trade back above here and get comfortable, that's probably a sign we're not going to have a vertical and we need to bail out of the trade. But we could probably risk 10 to 15 ticks on a trade like that and see what happens. If you didn't jump on it right here, then another option is, well, let's see if we can go make new lows if that does hold. And the first time we did, it really wasn't on much to speak of, just a little bit of level 1 selling, probably not worth jumping in there. But when we make new lows here on this level 3 or extreme selling aggression, that's telling you, okay, this has really got all the signatures and patterns of what could shape up to be a vertical type of a day down. And so jumping in on this area here, whether just on a market order or waiting for a little bit of a pullback or waiting for a little bit of a pullback and then a deceleration, whatever the case may be, that's, at this point, it's pretty clear this market wants to sell off and there's the pretty strong potential of a vertical. And that's basically what happened. Again, I said I could have held on a little bit longer, but the market gave a little bit of signal that we might be coming to an end here. Of course, it never really had any follow through, and the buyers that tried to step in here got flushed out right there, and it was another leg down. So, the point I'm trying to make here is if we put everything in context and we have, you don't even need market profiles to do this, but we know that there's been some deal of consolidation and we're finally breaking below this. And if you can say, well, that's potentially got the makings of a market that could break vertically, then you want to look within the day. What are some clues? And we know that this is just a wonderful reversal type of a pattern where we have really good buying. Now, this is based on the news, so you have to take it with a grain of salt, but really good buying. And not only is the buying waves low taken out, but it's done so with really good selling. So when that happens, pretty good sign of a reversal. You put all these clues together, and if you were aggressive and hopped in here, wonderful. If you waited to down here, even better. If you waited to down here, that's okay too. But a lot of clues were kind of aligning themselves, and so I hope that makes some sense to some degree. And like I said, look for some more information over the next week or so on some new stuff that we will have coming that's going to make this stuff even easier to do on a day-to-day basis. So hopefully this makes sense, and if you have any questions on that, let us know. All right, take care.